Okay, so obviously the big news is the report that came out yesterday, and what does it say and what does it mean? So let's start by just walking through the balance sheet, right? Because when all the dust settles and the noise kind of settles down, what we have left to deal with is what's the ending carryout and what does it mean? So over here is the carryout that was in June. The USDA has been saying that we have a 3.3 billion bushel carryout um, at the end of as of the end of June, and that was based off of 97 million acres and beginning stocks of 2.1 billion. What the USDA did yesterday was give us the acreage report, and that is right here. They lowered the acres, 5 million acres, down to 92 million, which was the largest um, acreage shift, I think on record. There might have been one other year in there, but I think it's the largest on record, and it was the biggest miss by analysts on record for sure. But then what they also did though was they increased beginning stocks. So if you take 5 million acres off at 180 million, you get you get a big number. And the trade thought that we were going to be at 95. So the balance sheet contracted by about 600 million of bushels of corn from what the trade was expecting just based off the acreage number. But then the USDA threw a little curveball and they gave the biggest bearish surprise in 30-year history on the beginning stocks by raising it 260 million bushels. So we have a 600 million bushel bullish surprise on the acreage report and a 250 million bushel roughly bearish surprise on the stocks report. So the net result is a bullish report and a new carryout number of about 2.7 billion bushels. Now the USDA, so this is kind of important. USDA has lots of different divisions, right? They have the NASS, and then they have the USDA WASDE group that puts out the supply and demand reports. We get those, we get that report on June 10th. So I'm just speculating and saying the WASDE is going to reflect what NASS said, the other arm of the USDA, and we're going to go with those numbers and just assume that we now have a 2.7 billion bushel carryout. So now it's all about weather and yield. Weather, yield, and demand, right? So if we start to increase yield because weather gets better and stays perfect, or hurt demand, our carryout starts to creep up. So if we yield 182 and we lose 300 million in demand, then our carryout starts to grow. Now, why would we lose 300 million in demand? Well, it's because ethanol is not running at 100%. So if ethanol is not running at full capacity, then every day we're losing so many bushels. And rough math, if we're grinding at 70% capacity on ethanol, then we're losing roughly 7 million bushels per day of grind capacity. So, and you can kind of do the math. Now, right now, the ethanol price is really pretty good and the ethanol margin is intact. We just haven't had the gasoline demand come back to where we can run at full capacity. So we've got a little bit of a conundrum to deal with, right? Where, okay, we've got a little bullish surprise, but what about ethanol? And I kind of want to, this number right here, this should keep us humble, because at a 2.7 or a 2.8 billion bushel carryout, that's still absolutely massive, and does not warrant massively higher prices. But if you look at the weather forecast, and this is July 8 through 14, this is your 8 to 14 day forecast. You've got significantly above normal temperatures and below normal rainfall coming right into the heart of pollination, right into this corn crop. And that's where this starts to get really interesting, because now all of a sudden, if you decrease the yield, things start to get very interesting. Now, one other point, this 92 million acre number that they had yesterday, as of June 15th, still had 2.2 million acres that weren't planted yet. Now, if for some reason those didn't get planted because they took prevent plant or whatever, if that didn't happen, and if we are able to get this heat spell to hurt pollination and knock some of the top end of this yield off this crop, and we can get ethanol back, and we can beat our demand estimates, now you have a real problem in the corn market because now your carryout has dropped. Now, if you remember last week, the lowest I could get this number in good faith was 1.8 billion. It was very, very difficult to get that number lower than that last week. So this report has major implications if this yield starts to drop and if our demand picks back up. So what are the funds going to do, right? Remember, going into this report, the funds were in a huge net short position, right? Probably in the 250,000 contract short. So as the weather starts to shift away from this number, either towards this one or back to this 3.3, the funds are going to make some decisions. And so that's why we're seeing massive short covering. So now before we jump into soybeans, let's look at the corn chart. All right. So here's our corn chart. This is Friday. This is yesterday. When the report came out at 11 o'clock, we were trading right here at 333. So we've rallied a solid 24 cents off the report from the time the report came out. Now, if you've been listening for a while, we've been talking about this 352 level right here. Because remember, the funds are they're run by human beings, and human beings have a pain tolerance and a plan, and we're emotional. The funds started building their position on this day. From here to here, they built over 200,000 contracts short. Well, they are now all 100% officially underwater. So they've got enormous pressure on them today to get out of their positions. So what started to happen on this decrease is we saw massive call buying as funds were hedging their position. And then on Monday, they just started covering their positions, right? Just to reduce their risk because they started to get fearful. And that was smart. So now they're in a pickle, because if the balance sheet starts to move towards this number, and again, this is extreme, guys. Please don't get off the call thinking that we're going to a less than a billion bushel carryout, because right here is what the USDA says it is. It's 2.8 until it's not. But if the weather continues hot and dry and demand picks up at all, the funds are going to start to look towards some number along this value line between 2.8 and lower. Now, if that's 1.2, 1.6, I have no idea where it might go, but they're modeling, they're going to start running their algorithms and trying to figure out where that yield could drop. And if it gets anywhere close to this, then at some point, they've got to make a decision to flip from short to long, because they're short 250,000 contracts. They're still short today. They cannot make any money until they turn long. And generally, you see them flip. And this is what happened last year from May 13th to mid-June. They flipped from a short of 250,000 to a long of 300. And they did it really fast. So that's what's catapulting these prices. I'm not saying that's what's going to happen, but I'm saying it could, given the weather forecast and given that now potential for a shrinking balance sheet. You know, we've been talking. There's just not a way for this balance sheet to contract enough to be attractive. Well, $1.5 billion or billion bushel carryout, that's attractive, and that could push us much higher. So, seasonally, this is our window when the seasonal tendencies start to really turn bearish. It's July 14th. Some would argue a little bit sooner. So as a farmer and as a grower, I think our mindset has to be exactly what it was before, because the reality is at the present moment, 2.8 billion is our balance sheet. And so what we want to do is we want to be very disciplined, and we want to increase sales and raise our floor systematically into here. If we can break this 363 level, and we might do that today, which is the 38.2% retracement from the move that started in January, clear down to this low. That's 38.2% right here. If we start to get up into this range, we want to raise our floor up to 370. And I would recommend doing that with puts at this point because of the potential of tightening this balance sheet even more if the weather holds. But you don't want to just put your head in the sand and think we're going higher, because we may not. We want to sell this into here if it does, and then if we pop on up to 390, we want to raise our floor again. So if you were in 310, I had a lot of guys in 310 and $3 short dated puts for between 1.5 and 2.5 cents a bushel, just to protect against this Armageddon type movement, right? It didn't pan out. That's fantastic. Now we want to change our focus and start looking at how to really protect that floor. So buying puts is a great tool to do that with. And the fundamentals have now shifted, and we want to keep our upside open for as long as possible, because we just don't know where the funds might decide to take this thing. Now, if we end up with a 2.5, if we end up squeezing the shorts out and we get up to this 380, 390 level, and that carryout turns out to be 2.8 billion bushels, they will put that short position right back on and take us right back down to where we've been trading. So this may not last very long, and there is downside risk, and that downside risk grows every day until the USDA tells us that our balance sheet is less than 2.8. So enjoy the ride while it lasts, be proactive, and look to reduce that downside risk, because it is very much alive. Now let's talk about soybeans for just a second. Here's the same analysis on beans, okay? We had 395 million bushel carryout. We've now changed acreage just a little bit. Now, the trade was expecting a much, much larger acreage number than what we got. So we actually increased the bean acreage, but we increased it by a lot less than the trade thought. And we actually decreased our stocks. So kind of the opposite of what happened in corn, right? We increased acres, we decreased beginning stocks, but not by very much. So we really didn't adjust the balance sheet by much. But nothing's changed in the soybean world, because we're still very sensitive to yield, and we're very sensitive to demand, because we just don't have a lot of runway for decreased yield. So we've been talking about this for a while, that beans have this huge range of potential carryouts that can create volatility, and that is still very much the case. But it looks like this scenario is more likely than the other because of the weather forecast. So soybeans, they have rallied off their low, and I've been bullish beans for a while, but because I really think China is going to come in and buy. It's always been my bias, but trying to be as objective as possible. This rally yesterday was a big deal, because it rallied all the way back to our top of our range, and now as of this morning, we've eclipsed this 887 level that's been the ceiling for quite some time. And if we can hold and close above that today, then this puts this I'm going to say 910 to 930 range front and center. And if we can climb above that, then so in my view, this is the low we want to watch. Okay, you got these highs right in here, but to me, this is the critical resistance level, is 922.5, 923. If we can rise above that, then we've got the potential for much higher prices. And again, if this weather stays hot and dry and it starts to look like we have yield issues, then beans can go significantly higher based off of what we know today. I don't think 950 is the ceiling. I think that it's something north of where we were trading in January. I don't know where it could go, but it's something that we want to pay very close attention to. Now, the flip side is true here too. If the weather turns cool and wet, then and we start to talk about bigger yield again, then we have downside risk again, because China may not come to the table, and new lows are not out of the question for soybeans. So defend yourself with puts. That's, if there's any to me, if there's anything that makes sense, it's just keep investing in those puts systematically as we work higher into these resistance zones, because you want to give it the potential to give you the windfall. Now, both of these balance sheets, to me, the biggest thing about yesterday's reports isn't necessarily for this year. To me, it's all about next year. So maybe we're going to get the opportunity to sell some higher prices. But if we gravitate towards a carryout lower than 2 billion, then that puts front and center weather for next year and acreage. And we could have a shot at much higher prices next year if we really do start contracting that balance sheet, and that phase one trade agreement starts to materialize. So I think my thinking has changed pretty radically, where with the 3.5 billion bushel carryout, you want to sell and manage out years pretty aggressively. Now I think we put that on the back seat and just manage this year's crop and listen to what the market's telling us to do, because I think it can really change its opinion in a hurry, like we saw yesterday. Last but not least, everybody's favorite stepchild, wheat. We are right at our lows. We do have significant bullish reversal action that has happened in wheat. And so I'm bullish wheat above 435, probably really above 423, above this low. I think the wheat favors the upside, even though we had kind of a bearish report yesterday, because I just don't see it getting left in the dust by corn if corn is going to turn around and rally. I'm not saying we're going to 520, 530, but I don't think that, I think the downside is less attractive than the upside in wheat for sure today. All right, I hope that is helpful. If you were late joining or have any questions about what I was saying, please call. I think we're going to have a very interesting July, and I hope we get the shot at some higher prices. Have a great day, everybody. We'll talk to you soon.